Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 1st, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, you see that the ES is basically holding, currently trading in a developing double inside day pattern. It's also holding within a tightly forming pattern heading into the election, but now also heading into the Fed interest rate decision on Wednesday, and we also have NFP on Friday. So this week, it could be a throwaway week here where we're really just kind of working back and forth within the range, playing the extremes. I would say to watch the previous session's high here for a shot at failed range expansion and a push downward. I would also watch the previous session and previous week's low. A push into that area could offer an opportunity to reverse price and fade it back up. So that's kind of the short-term plays. Right now, on a higher time frame basis, we're really just holding and waiting. And until then, it's going to be difficult to play the swing side. Here is a look at the intraday. Obviously, we've been watching the 2120 to 2122 level. It's been an important zone. We've kind of widened that out to 19 to 20 for yesterday's market. And that was an important area again that held a perfect bounce here, came into the zone here, and since has bounced again. So the area of absorption has been true. We've been watching that area very closely. But up here, you've also seen rejections off of 28 to 30. And so that's the trading range right now. You got 2119, 2120, up to about 2128, half to 2130. That's the early little range right now. We can't stay in that range for long, but that's the zone to watch for reversals back toward value. Once we see expansion outside that range, it could get very, very interesting. So 2119 and 2120 continues to see absorption, but if there is any failure to hold 2118s and we start to break, it could be a significant push downward, not only into the previous week's low of 2112 half, but perhaps into the 25% expansion, which is 2103. 2103.75 is a significant level. It has been a first test buy, a first test sell. It has been everything over the last year plus. So this has been a very, very big level. If we were to see that level, I would anticipate some major reactions to that level. All right, let's take a look here at crude oil. Here's crude. This one continued trending downward yesterday, and it was a significant move. And one thing we've been talking about is the 52s, how the 52s hadn't been hit since July 2015, so we knew that heading into it. Then we talked about it as it happened that day and during the session. And the next day I mentioned, hey, we're not even back into 52s. We basically hit it in one session and reversed. So we were looking for a pullback. We got a pullback. We thought there might be a buying opportunity here until the stops came out. And from there, we've seen the absorption go and lead this thing right back to value. We were talking about value being 45.60 up to 46.69, 46.69 being composite, being more strong than micro composite. So 46.69 is the major target. We reached it yesterday. Now we're kind of holding. We're seeing some buying above it. What could happen around this target? I mentioned before, we have a sloping channel that's developed, right? And these patterns aren't always perfect, but this is generally what's been happening here, right? We've been seeing this thing play out according to this channel since July 4th. And so right now, here we are right at the bottom of the channel. We could develop a little bit, and then we could squeeze the next leg and try for prices above 52s yet again. So this is what we talked about before. We visualized that well back when price was over here in the 52. I said, hey, this thing could reject here, and we could drop down to the bottom of the channel back to value, and then we could see bulls come in and defend it back up. So we've seen one leg of that come to fruition. We've hit the bottom area. Now we got to see if bulls can defend value and return price back up. But in order to do that, at times price needs to chop in this area a bit, get some late bears short, and then run their stops. So it could be a little bit of time developing in this zone, especially once price goes from rejection back to acceptance. Then price tends to stick around acceptance for a while because that's where everybody wants to trade it. So we may be in a bit of a holding pattern now that we've moved into this area for crude, but it's been a nice move nonetheless. Let's take a look at the intraday time frame. Here's the intraday. The level we talked about yesterday was 48.20. Seems like so long ago now. But 48.20 was a level where we said, hey, if you can't hold, price cannot hold, or get back above this 48.20 level, it was right here. If we cannot get back above 48.20, we're likely headed much lower with a 2-day move into 46.69. And instead of 2 days, it hit there by the end of the day. I mean, it was a steady train lower the entire session. And it was a huge move right into that zone. A high range day. What usually follows a high range day is a trading range market. And that's kind of what we have right now. So you can see the range right now is defined from 47.25 to about 46.60. But trading ranges are fade new highs, fade new lows. So look for price to get above these highs and then fail back to these lows. Look for it to run these lows and kind of trade and widen this thing out. So right now, after a high range trend day, you usually see a digestion trading range day. That's what we have right now. The idea is to fade new highs, fade new lows short term until proven otherwise. All right, let's take a look at gold futures. Oops, that's the intraday. Let's bring up the pivots here on the weekly pivots for the daily chart. There we go. So this one I've mentioned before, I just don't have a great feel for it. It's just not, it doesn't have the quality of movement that we're used to seeing. Obviously it's waiting as well. We have the upward sloping flag thing still in effect here. I talked about the 1280 and potential rejection there. And we had a digestion day yesterday, and so far overnight pre-market we've seen the price run through that level. So this thing continues to quietly move higher. And I would say that a retest as high as 1310 to 1306 could still offer an opportunity for bears to defend. So this, to me, is a short-term counter-trend move right now. And then we could see primary participants come in and influence price back down. Otherwise, back above this level clearly leads price back to highs. And then you're talking 1360s. So right now, it's just a quiet uptrending channel here that continues to play out. We could continue this approach as high as 1310s, but it could continue to be choppy. Nothing says it has to get there right away. So right now, it still is not the best environment to be trading, at least from a swing standpoint. But you can drill down into the lower time frame as well. We do in the trading room. Here's a look at the daily chart of the NQ. Daily chart of the NQ right now, you can see double inside bar developing right now. That's where the previous session's range is inside the range from 2 days ago, and the current session's range is developing inside the range from the previous session. And that's usually an indication that prices are tightly coiled and they're awaiting expansion. And when it happens at the end of a cycle low here, because we've been trending mostly up, right? Cycle down, cycle up, cycle down, cycle up. Now we're at a cycle low forming a double inside day. That could have enough shorts that get their stop squeeze, and now we're retesting highs at 49.20. I thought it would happen a little bit earlier off of 4,800, but since then we've kind of just held here and we haven't really launched. There was also a caution flag last Friday that would happen, that we would kind of hang around for 2, 3, or 4 days before some sort of lift occurs. And so right now it appears that the energy is being built and we have the potential to squeeze here. So we're going to continue to watch the previous week's low, basically 47.85 or so. That's going to be important right there, 86.5. Because any failed range expansion below it could be a huge opportunity to squeeze. So that'll be something I'll be watching for. If we look at the intraday time frame now for the NQ, one thing you'll notice here is a very tightly coiled range. The previous session here off of 47.95, you see that level right there? That was a very important level. We talked about needing to be held at some point. It got a little below there, popped back above, and now it's become support again. So clean short-term area right there to watch for signs of rejection. But the real zone here is 48.40. That's the wider range, and the lower edge here is 47.85. So that's the wider edge of the range. So don't get trapped trading just in here, because at some point it's going to drop to here, then it's going to rally to there and trade in the range. So that's the early idea right now, is that watch the edges out here, because right now this is a lot of chop around 1 and 5 day VPOT. Let that chop around. It's also MC VPOT 921. Let it come to an edge. It's not going to stay there long, and then it's going to flip back to the midpoint part of the range. So watch those edges, 48.40 and 47.85. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.